Just took a quick look at the screen, John, and greens finished the day in the green. What do you have to talk about?
Well, that's a pattern we've been seeing. We'll go over the beans and corn. We have a report on Friday. We'll talk a little bit about the banker relationship and hedging. I want to get that in there for sure. Cattle at the end will be no specific recommendations, but I do have something that I am doing in corn. I'm actually kind of excited about it. Well, as excited as you can be in these markets. So there's a specific corn strategies that we're looking at, but just the general harvest stuff, because we're right in front of it. We'll just talk about what's going on, what people are talking about.
Let's do it.
Welcome to Hedge Heads, where hosts John Prischmann and Ryan Tungseth discuss commodity markets, hedging, and anything related to trading futures. Remember, the risk of loss in trading commodity interests can be substantial. These are opinions only and not trading advice. While no one knows where the market's going, they're not afraid to share some ideas.
Well, John, I was thinking today about our sponsor, American Federal Bank, and how important it is to have a banker that understands what you're doing with hedging. And
Yes.
since we're the hedge heads, we should probably talk a little bit about hedging with a banker and how that relationship works.
Yeah, and that's one of the most important ones. And the reason why we bring it up, you're going to have a lot of meetings coming up. If you're lucky enough not to have any of that, that's not so common in farming. It's a cash-intensive business up front, and then you don't always get paid up front. So there's the bridge loans, and everything, the operating loans to keep it going. So it's very common. But what's not common is to have a really good hedging relationship. It's a mystery to everybody. It's a mystery maybe to the person on the farm with account. It's a mystery to the banker what to do. Sometimes you have very knowledgeable guys. We're lucky enough in Fergus. There's a number of knowledgeable bankers around this area, and that's what you want. You want to go in with an understanding. Here's what the plan is, and then do the plan. And at the end of the plan, you should have X dollars of profit. That would be the whole point of it. You wouldn't go in, hey, I need a $30,000 marketing loan, and then start buying corn because you think it's cheap and you raise corn. And that's what ends up happening quite often is guys try to make money in their hedge account. They're giving some money. Nobody has any oversight at first. And then it's just like, let's get into this hot market or that hot market, or I think this is going to go down. And you don't have that plan. The plan's essential, and the banker is going to fit right in there. I've worked with advisors where the banker and the advisor are working together. Then they're doing orders through us. And then there's also been the three-way where it's been us, the banker, and the advisor, or it's just been us and the banker. So there's a lot of different combinations. But the key is that they know what you're doing, that you have a plan. Like go back a couple years ago, it was very simple. We had corn at, $4.75, $4.80. The weather looked good. You could buy $5 puts for 33 cents. So you could say to your banker, hey, I have 100,000 bushels I want to hedge here with a 33 cent option. Gives me the math worked out at 465, basically free and clear is my floor. And then I have my upside wide open for the growing season. So it was simple a couple of years ago, and that he should be more than happy for you to have a 465 guarantee through December, and then have your upside wide open. You can't beat that. But then you're going to come to years like this where it's going to be really important, where there isn't any meat on the bone. We're below the cost of production. Inputs are high. But you'd want to have a conversation with them. These are our price targets. This is where I want to start hedging, or this is what I want to do. Or once it gets to this level, I want to talk about how we're going to hedge this off. And obviously the levels would be at least profitable levels would be the goal. And it's good to have that relationship. They loan you money to get this done. They want to make sure it's being applied correctly to the markets. And I've said this in past podcasts, how important that relationship can be. Because cattle's a perfect example of a market where you don't want to be left hanging. You start hedging, you need to finish the hedge with a plan. But even the best planned hedges can go bad. I mean, you've had elevators almost go, get margined out in the drought in 2008. Years like that, you can have big problems even if you're well funded. But getting a plan together, working with your banker, that's like number one is what it should be on your list if you're going to begin hedging. What most people do is they hear somebody talking online or they hear talking head, or they go to a farm show, they hear someone talking there, they sign up, they don't know exactly what they're doing, the banker doesn't even know they're doing it, and then they just start speculating. And that happens, and then it doesn't always, it might turn out all right, it might not, and then I bought those puts, they didn't work, and then people never hedge again. So you don't want to go down that road, the hard lesson road. You want to go with a person that knows what they're doing, have a banker that knows what he's doing, and then start applying it in the markets with a plan. And that's really your goal that you should be looking at. And like I say, in this area, we're lucky enough to know a number of them. Others want to learn, and we do that too. We talk with bankers that want to learn more. Hopefully they can listen to the show and learn more. But anyway, that's the role of the banker, and it's very important. It's going to be very important this year.
Yeah, absolutely. And I think the two biggest things that you said that need to be pointed out is you got to have the plan. I know so many guys who their plan is whatever they read online that day or whatever the newsletter said 2 days ago. And it's not a fleshed out plan based on your farm, on what you're growing, or on what the season actually looks like in your backyard. You need a full plan and for the season.
It would start with even the report coming up here, I think on Friday the 12th. It's like, is there anything I need to do before this report? This is something you should be talking about right now. If I don't have storage, do I need to be doing something that, like, is this the kind of report that could make the market go very fast one direction to the other? And it really shouldn't be. But you, at this time of year, you can have those that really, really change the market dynamics. I did a couple reports ago for the beans with the big cut in acreage. But it's an important time of year because some of the bushels are sold. You might want to cover, via call. That's very common. You got to decide whether you're going to go in storage and pay storage, or whether it's worth it, or are calls cheaper. But it's definitely a planning stage. I would say May into June is probably the most important. And then fall, the decisions you make now can have a huge impact on your bottom line. So another big planning stage here. Specifically, what would we be looking at? Here's what I like. I like the idea that I have something in place so when we get these rallies, the corn can get sold physically. Via call. Are you short puts buying calls? Well, that carries a risk. If it goes low, you're gonna end up owning more corn. So it's a very risky thing. But I want to own calls for bushels that you want to move on price rallies. Because what I think is going to happen is you're going to get your rallies. It's going to be really fast. And then all these guys that hadn't hedged want to sell their physical grain. So you're going to have these fleeting rallies, or it appears that's what you're going to have right now. We don't know. Right now, the funds have been covering. Corn's looking strong. I mean, today came back again today. I don't know if you saw that.
I was shocked today, John. I pulled up the numbers here, and cattle were red and grains were green. Yep. Even wheat.
Yeah, wheat got in action. So the grains have been looking good, and we could have a rally very quickly that means nothing other than a marketing opportunity. But I want stuff in place so when it gets to these prices that you can sell your grains and then you still have your upside wide open. So what would that be? Well, guys had bought some March calls, and I got out a lot of those, unfortunately. But the guys that still have them on will be able, another 5 cents, be able to market their March corn, deliver in March, and then have their upside wide open still in March. So that's the kind of plays I see right now. Beans, it's got us in a holding pattern. What do you do there? Lots can change there that make it go a lot higher.
Still watching that spread.
But what's happening now is China's not buying. It doesn't even look like they're close to buying. They've really gone out of their way to avoid the U.S. I think it was record imports from Brazil. Now they're turning to Uruguay, so they're really trying not to buy from us. Huge concern there. Again, for what this could be, these markets aren't that bad, considering the numbers we have. Whether it's the low world corn stocks, and then they expect us to have this great demand the whole time. There really is no reason to go down unless Brazil started dropping in corn price, and so did Argentina. If they get under our price, then a guy's got to get ready to sell if the exports slow up, because that's going to be a tough road for corn if the exports slow up. But there's not a lot of action. I mean, you don't walk in expecting something crazy to happen, and it usually doesn't. But the grains have been fighting pretty good down here. A lot of people read way more into it than they need to. But the funds are buying, and maybe they are buying for a reason. Is it really going downhill? We just had the crop conditions come out, came down 1% in beans and corn. I don't think we need to look at those anymore this time of year. I mean, it was. They said that corn was up because they thought crop conditions were going to drop. It's 4 or 5% harvested right now. They don't need it. It doesn't matter anymore. Did the frost help in North Dakota? No, I mean, I don't bring these. This is the kind of stuff that gets you sidetracked on Twitter. Not that it isn't real for the farms that happen, but you start reading this stuff and you read enough of these stories, you think it's widespread and the market doesn't know. We'll know a lot more in September and October, which direction the yield's trending. It looks lower just because the bar is so high. Where's your final yield number there, Ryan? Where are you?
You know me, I don't have one.
Don't get people angry. Nowadays, you have to give the answers that people want because
197.
190. You better not have that get out there. You'll be Arlen. They got after Arlen. A Stone X guy for putting out his numbers, but yeah, it's gonna be.
I'll go. I'll give you a real answer. How about that?
Well, okay.
Somewhere between 177 and 197.
Yeah, well, I hope it's in that zone. It's gonna be. It's people focus way too much on it because they're gonna release the number, and then that's just what it is. You can get angry and emotional about it, but that's what the traders are gonna trade. That's what you should hedge off of. So it'll be interesting to see what direction that trends.
It goes back to last spring too, where the number was the number, but when you're watching these exports go out, it wasn't. I mean, yes, the yield number maybe was, but the amount of corn, you have to use the USDA's number to a certain extent, whether you agree with it or not, and then after you use that number, then you can look at basis. You can look at what are the markets actually doing.
Yeah.
But you have to use what they use. They're not going to adjust it till January.
Yeah.
If they even do that.
What you don't want to do is store it and just get angry. I mean, that's what I mean. I get a little swayed by Twitter because that's probably not the consensus. I don't think anybody's happy with the price or the outlook or the inputs. But I don't think there's as much anger as you see on Twitter on a daily basis. There's just so much anger, and I think they're mad at the whole system. I can't tell, but it doesn't do any good. But I do have a good follow. Before I forget, a new guy popped up here. If you are on X and you like to follow people that have good information, I'm a big fan of that. You'd think that there's a lot of people with a lot of good information. You would be wrong. There's a lot of people with a lot of fiery opinions, and that gets a ton of views. But here's just good, solid information. I like the way his charts are out there. I like his processor sheets that he puts out there. It's at Grain Informant. You can Google Grain Formant, GRAINFORMANT, and I've had a couple direct messages with him. Nice guy, and he does what I like. He puts out information that's useful. It's not going to tell you where everything's going, nor should it. You need to piece the pieces of the puzzle and put it together for yourself. But still, it's good information for free on Twitter. And he's what looks to be he's trying to do things a little different, like the maps he just put out for the good to excellent for corn and beans. Really easy to understand. I love how the states. You can see all the states, and you can see the shaded colors, and you can see the change I love the ethanol. You put out the ethanol bids for all the states, or a lot of the different ethanol plants on one sheet. That was great to see. Anyways, it's good information. I appreciate guys that put out good information, and I hope he keeps doing it. And so that's my follow of the week. I don't even know if I can get a follow of the week. It's
you're gonna come up with one a week. You're gonna be stretching it because there aren't that many good guys. So it's nice to have one who's really sharing great information.
There's a lot of people that make business contacts. I mean, I think it's great for that. It's also interesting to see pictures from different producers doing different farming things. That's not what we are interested in, but it's interesting stuff. Like you see the guy with the beans and the wheat in the same field, and you get a lot of neat ideas, and there's a lot of good accounts that way for sure. But then there's the angry, fish shake a angry fist every day, or the systems against you. That sells really well, and you'll get 1 million followers being like that. But still, we're trying to apply good information to hedges. That should be the goal. Twitter's great, or X is great, and you get a lot of stuff, but you need to filter a lot of that. You just mentally, because you're just going to get different characters in there. My philosophy is the guys that are making money, they do talk. One's he is in France right now. It looks. I think he's probably a successful guy. He's drinking fine wines. He's eating cheese, and that's great. But he doesn't talk a lot about his trading.
No,
great guy, great follow. But he's not saying, here's how I do it. Why would he? Why would any of these people do that?
Right.
So don't look for that on Twitter. What do you have a follow that you like?
I don't want to burn them all up if we're going to do one.
Yeah, we better.
Week,
yeah, because that's going to be tough.
I agree with you on. I look for info over opinion.
Yep.
You can put some opinion out there, but I love some follow. Anyone who's sharing info, and then you can decide.
Yep.
From that info.
Yeah. We try to do that, and I put that out there, spread trades that we're following or we're interested in, like the July, November. Guys might choose to be in it. It's not a recommendation to get in it, and I don't even say if I'm buying it or selling it, so it's hardly a recommendation, but it's to get people aware of, maybe this one is going to have some action this year, and that's more what I try to do there. Obviously, the clients are doing whatever we talk about, and obviously private, but I like to get out some information. A lot of people put out charts, and again, they have their own lines, their own trend lines, that everybody makes up their stuff or does their stuff, and it might not fit you. It might confuse you. If you see enough charts, you're probably going to see what you want to see, but the successful guys have no incentive to put out a whole bunch of information, especially the stuff that made them successful in trading. Just because why give away your edge? Not that they don't give you, there's definitely good information. We'll say it again, we're doing one a week, so we gotta save it. But more often than not, guys are looking for the information. You start surfing for the stuff you want to hear about. Right now, it would be all the disease and the corn and the everything coming down. The yield's going to plummet, and you'd be convinced that a roaring bull market's around the corner. Now, you can have that information, and then you look at what the funds are doing, and you kind of look at the spreads. They've been creeping up. You put all three pieces of the puzzle together, and then maybe there is something going on there. And that's where I'm at. I'm not negative corn necessarily. I'm like, why are the funds covering everything? Is there something that we don't know? Because in 2020, they started doing this. Last year, they started doing this. And those years, we rose substantially. So they generally have the best information, and it's wise to see what they're doing. But it's very curious why they felt the need 2 months ago to start to get out very quickly or over the 2 months out of their short position, when it seemed like a slam dunk to be short. So that's on my radar screen. Again, we went over beans. What are you going to say about beans? We're waiting for China.
Here's what I'm going to say, because he just inspired me, John.
All right, nice.
I have been tracking, and maybe no one else cares, but the daily range on usually the front month and then the November, December contracts for corn and beans. So I think I might just post that range each day. Just to have
Why
the
wouldn't
info. I mean, is it helpful? I'm not going to tell you what I use it for, but I do write it down at the end of each day because I have not found anywhere to find it aside from the end of the trade.
Yeah, no, and everybody has their thing. If it's useful to you in your trading, that's definitely what you want to do. And I'm more of a tape watcher. I definitely look at charts, buddy. When you're watching every tick every day, unfortunately, and you can tell by the way we've been talking about the markets, there hasn't been much to watch. Like you're in these little ranges with little news. Cattle has been more volatile back and forth, but now that's getting tougher. Just the straight up every day isn't working. Now we're going to go into more of a sloppy market. So you kind of come in here and there's not a lot going on in the stock market. It goes up. The oil market's quiet. Energy markets are in general quiet. And you just don't have the old commodities that we normally have, except for the metals. Metal guys are happy. It goes up. That's not been volatile, but it's been trending higher. So it's not like there's nothing going on, but still, this is not what we're used to at all. There's usually something going on, a story or two breaking, whether everybody's just kind of fatigued from all the tariff talk or a screw worm not long ago. There's always something going on, changing stuff. And there really hasn't been since midsummer. I mean, can you think anything that's really rattled these commodities?
No, and it shows in the volatility. On
It does.
All of them.
Yep. We're not imagining this. The implied volatility is not high.
No. And it seems like if any little burst it gets, it immediately gets beat back down.
Yep.
I mean, speaking of ranges, November beans had an 11.5-cent range all day.
Yeah, that's pretty quiet for report week coming up at harvest. I mean, there's just
it wasn't Monday, but
there's not a ton happening. And it's not like we expect corn to go up 80 cents in the next couple months, nor is it going to go down 80 cents, or it shouldn't. So how do you play the ranges? Well, day trading, swing trading is really what guys are doing. They're getting involved in corn for a couple days, maybe 2 or 3 days, getting out, taking your profits if you have profits. And that's really the markets we're in. There just isn't this power move that you can do right now or you have to be doing. I'm definitely working on stuff in corn. So if you want, call me and we'll go over that. I actively am putting some stuff on there for next year's new crop corn, December 26th. But other than that, it's just this. I rearranged my office. You saw that. Well, I didn't. By me, I say my wife.
Yes, you told her where to put things.
Yeah, and I was working or attempting to work today, but switching that stuff out, and it's just normally there's more action, or at least the outlook's better. Pretty grim for wheat, pretty grim short term for beans, and really grim for corn. But still, everything's hanging in here. And what do you do? You can't really buy it. You can't really sell it. It becomes for a difficult market. We're not the only ones complaining. Plenty of people on X are complaining about the lack of volatility. And then you could have the option guys that must just be dying in this stuff. They thrive in the volatility, and it's just not been here.
I think it'd be really hard to be an option seller right now.
Yeah,
with these volatilities, that's got to be brutal.
Yeah, but you can move to other markets. I mean, if you're trading, you have all the metals, you have the interest rates, you have sugar, coffee, cocoa. You have markets that are moving all the time. On that, just the hedge side of stuff, it's very, very quiet. I feel like if a cattle guy hedged, he's already been hedged. Now, what's going to be super important let's move on to cattle really quick.
Yeah.
What's going to be super important for cattle is the next round of hedging, and it's going to be the most difficult. This is where if you bought LRP, they've expired worthless a couple rounds. If you bought puts, they've expired worthless. If you shorted the futures, you are paying margin calls, and you're sick of that. I'm really sick of that. But the next round that you're buying in a sale barn for a 370, you might want to take a look at some downside protection. That's the one that's going to sting if it falls from here. Could it continue? Absolutely, it could continue higher. But if you start shelling out this kind of cash for this and don't have any coverage of any sort, and I think that one of the bigger risks coming up for everybody is going to be basis risk, meaning in one region of the country you might be getting $20 or $30 less than the other region, and we could fall and then still be very strong in North Dakota or Western North Dakota, and then be very weak around this area. So basis risk could be a really killer, especially if you have LRP and it's not falling, or puts. It's not, the futures are not falling, but your local market's falling. That won't do you any good on the cattle that you need to sell locally. You're not going to haul them probably too far away. So basis risk with these kind of numbers, normally it's not a risk, but when you start going to 370, 380, 390, $4, if one region's getting $4 and the next region's getting 370, they're both very expensive, but that's a $30 difference. So there's a lot of dangers coming up for cattle. I see basis risk as one of them, just regionally. And what do you say about it? It's just a market that doesn't quit. We're getting undervalued relative to where cash is, and it's this cycle that repeats. Like, it looks weak, but now we're under cash, and cash is not coming down. As a matter of fact, feeder index is still going up. What is it, 367? It's something ridiculous.
Yeah, I didn't see what it was. To me, it's so hard because you started this whole section with, if you had shorted the market, you've been paying in margin constantly. So it's such a hard decision to put a hedge on when you've been burned for so long.
This happens in grains.
It's really hard.
Yeah, this is going to be a disaster eventually in cattle, because I've seen this in grains. You get really burned, especially 2020. Very burned, and then you think, okay, so it's bullish this year. I didn't catch that, and I got a lot of margins. I'm not going to let that happen to me next year in grains at all. And then, of course, that's when the ultimate collapse comes. And so the second round of hedging after a big, large bull market tends to be the most important one, and it's the least involved one. And I think that's definitely going to happen in cattle too. It's very expensive to hedge, and that's another thing.
Right.
$17 for guys that were buying puts. These are puts that have been sold here. That's January, $18, $17, but that's right by the money. I think the guys that are doing it are saying, hey, I'm giving up this money on insurance, but I have my upside wide open. I don't have any margin calls, and instead of 360, I'm going to get 343, and I'm totally fine with that.
Yep.
Because it is a lot of money. And so that's what those guys are doing. Do I want to spend $17 on a put? I don't.
Right. Especially not if you're speculating.
No. And then if you go out further, then it gets to be obviously more and more expensive. Bugsy, the RJO guy, every morning, he talks about if you want to participate in the cattle, like a bull call spread, buy a lower call, sell a higher call. That doesn't open you to margins. If you're bullish, if you're bearish, you buy a higher put, sell a lower put. So you're basically buying a window. And then that's the way to play the markets. And I agree with them. I want to hit that home run. I want these ultra cheap feeder cattle puts that only cost 50 cents and all of a sudden they're $35. But good luck with that. Look at how far out of the money you have to go to get a good deal. And vice versa. Look at the calls. Look how high you have to go to get a cheap call.
It's insane. I've been watching them.
Yeah, it's the opposite of the grains. The implied volatility is
and if you want to go anywhere out, you're not doing October.
No.
So, when you get out there, it's crazy both ways. And that's the volatility, the opposite of where the grains are at right now.
Yep. Yeah, so it's tough in all these markets for hedging. Next episode, we'll probably go over less on the markets, unless the report's kind of a big one. Less on the markets and then more on the process of how all this works and what guys are doing, stuff like that. Do you have any patterns that you're seeing guys are doing or calling on at all right now?
Not right now. It's a lot of guys I talk to are gearing up for harvest and or in the middle of wheat, and it's been an interesting time. Then that's where they're going to be in the tractor for now.
Yeah, and I think part of it is the numbers don't work great, and they I think they're probably excited for the yield potential this year. But the numbers don't work great. There's going to be conversations with the bankers pretty soon. And then the outlook for next year, we're 460 for December 26 corn. It's not the end of the world, but it's still, none of these numbers work right now, or very, very few of them work for people. And it's better just to avoid the markets when that's happening, especially if you don't think it's going to go. Yeah, well, I hope that there's opportunity here. It's a couple pieces of news for beans, and it's going to be a different market. We have South America weather coming up, but do they worry about it in September and October? No. November? No, not really. December is when you're first going to start worrying about it at all. So really, there's a huge gap to news. The next big one's going to be when they start actually getting in the fields. Is it above or below what they thought it was going to be? That'll definitely be a market mover. If you're starting to see yields come in way below what they thought they were going to be, what they thought they were going to be last year, and it's starting to be widespread, you're going to see corn on the move for sure.
Definitely.
And beans. But really, there's not a lot on the hedging side of stuff besides the stuff I'm doing in corn right now that I'd even be considering. I thought, I was thinking to myself, maybe some soybean puts for September. But it's, again, there's not a lot of meat on the bone in any of this. Like, what is your goal? To make 5 cents?
Right.
10 cents? We're not going to get the collapse to $9. It's got a lot of bad news in it right now. So it really limits what you can do in these markets. I'm sure everybody's struggling with that. But it's be careful to do. You don't want to do something just to do something because you're bored. You want to make sure you're looking at the right stuff. But the stuff I'm getting on in corn right now, and again, give me a call for the clients that are listening, I think is going to be really important because I think we're going to have rallies, but I think they're going to be short-lived. You're going to have to make a lot of decisions really quick. And this will help with that. Anyways, it's at least an idea that I'm looking at. Unfortunately, it's more for new crop than old crop, but old crop works as well. Yeah. And the price is right. So we're definitely looking at stuff.
I like that. We should also mention that if you're going to be around Big Iron on Wednesday this week, so what's that, the 10th?
Yep.
John and I will be wandering around there. You can listen for John's voice as we cruise around. You'll hear him booming over the rest of the crowd.
Yeah, we'll be talking to guys and stuff like that. We didn't get the booth. And I don't know if the same people are in charge. I always had a sour taste in my mouth. They always wanted me stick me in that dirt floor one. This is at the heyday. This is years ago when all the booths were full and you couldn't get in. And they kept on, we can get you in over here. And they weren't really nice about it. And it's like, it's got a dirt floor. I'm like, does it have traffic? A little. And it's like, if it's that enticing, maybe I'll skip it. Right. So I've never put the effort, to get the good location booth. In farm shows in general, what I found, here's what my experience has been, is that their current broker that they're with is bad. And they're doing bad. And then they come talk to me about how it's bad, like insinuating that I was the one that caused it. Like we're all the same. So there was never I haven't needed to go to egg shows. I didn't feel the need to. And that whole experience, like I went to multiple ones and it's like, I don't know what I can do for you. It sounds bad, but I got a lot of that. It didn't sound like guys were doing well or had good ideas and they were taking it out of me, I guess. But
you're not from Chicago.
Yeah, exactly. If you're from Chicago and you have a newsletter, you definitely should sign up with them because they're from a big city. They know a lot.
Absolutely.
A ton. Yeah, big city guys.
They're right there at the market, so they have they have notice every time.
Yeah, or they're looking at the exact same electronic screen nowadays as we are. Yeah, the edge in Chicago is officially gone, I would think. Except for if you're a hedge fund, you need to be physically so close to that data that you can edge out the guy with milliseconds. We don't do that here, so it doesn't matter for us. But
so new technology that's not the case either. So
no, new. So we'll be wandering around, and maybe we'll see you there.
Absolutely, maybe we'll go there next year.
Yeah, maybe. And if they treat us, they're nicer on the phone. Maybe we'll get a booth there next year.
Speaking of being on the phone, how do people get a hold of you, John?
218-731-1578.
Thanks.
Sure. That didn't work at all. Okay. You said that greens are green.
Yeah, I noticed that.